Good evening, everyone. Please confirm if you can hear me. Asana Musa, can you mute your mic? Okay. Okay. Good evening, everyone. And you're welcome to another edition. Mokuna will mute you on mic. Mokuna talk abeg. Good evening. Let me be sure if it is not AI.
Good evening, sir.
Good evening, sir.
Good evening, sir.
How are they? Yes. Good evening. Yes. Confirm.
Not
It's
too
not.
fine like that, though. I cannot wound us.
Both of us, all of us are not fine at this, as in at this stage now, right? All of us are not. If I tell you that I collected injection on today is what? Today is Thursday, right? I think Tuesday, Wednesday, right? Tuesday, Wednesday. You see, everybody, all of us just the manage.
Sorry, sir. Sorry, sir.
No,
Quick
that's fine. That's
recovery.
fine. Yeah, thank you. Thank you. Okay, good evening, everyone, and you're welcome to another edition of our lecture on performance management. In today's class, we shall start with a new topic, decision making. Under the decision making, we have the short-term decision, which are make or buy decision, accept or reject offer, discontinued operation, and relevant costing. So we shall start tonight. We shall start with one of the decision, short-term decision, which is on relevant costing. When we are done with relevant costing, we'll move to the make or buy decision. For make or buy decision, to accept or reject offer, then we close decision making with discontinued operation. Class, relevant costing under the short-term decision making is one of the, let me say, somewhat complicated if you don't understand the principle. And we'll break it down for you to understand the principle behind it. I think it was tested last diet as a compulsory question. By the time we solve one or two questions under relevant costing, that compulsory question will not be a problem, I believe. So let's start with relevant decision making. Under the decision making, we'll start with the short-term decision, relevant cash flow and decision making. The question is, what is relevant cash flow? Or what is relevant costing? You should not forget that our topic is decision making. Short-term decision making. Under the short-term decision making, we have the relevant costing, the make or buy decision, accept or reject offer, and discontinued operation. Now, we'll pick it one after the other, which is the relevant costing. The relevant costing are costs that may affect the decision of an entity. Relevant costing. These are costs that will affect the decision of an entity. Labor. Salaries, you have to pay them. Are they relevant? So, a relevant cash flow is a future cash flow arising as a direct consequence of a decision. What are the relevant cash flow? Don't forget that when I said relevant cash flows, it may be an inflow or an outflows. We have the characteristics of relevant cash flows. It should be a future cash flow, and so all sunk, committed, and historical costs are not relevant. We've started the relevant costing class. Please pay attention. Don't forget that our topic is under decision making. Under decision making, we have the relevant costing, the make or buy decision, accept or reject offer, and discontinued operation. Now, relevant costing. Then our costs that will affect the decision of an entity. And what is relevant cash flow? Is a cash flow arising as a direct consequence of a what? Of a decision. The question is, what are the characteristics of a cash flows? Then, all sunk, committed, and historical costs are not relevant. The salary that they paid you at the end of the month, right? It is a sunk cost or a committed cost, because at the beginning of the year, you would have budgeted that you will pay a salary, right? Whether you continue or not, in as much that the business is still in existence, you will pay your staff salary. It is a committed cost. Any historical costs are not what? Are not relevant. It should involve actual movement of cash. So depreciation, provision, notional costs, apportioned costs are not relevant. When you see in a question where you have depreciation, provision, and apportionment are not relevant for decision making, because these costs will not affect the decision of an entity. It should be an incremental or differential cash flows. And so fixed cost is not relevant. If they say something is an incremental, it means that it is actually increasing on year basis, or it could be that the costs incurred specifically for a project. So therefore, or differential cash flow. And so fixed cost is not relevant. The fixed cost is not relevant if it is not an incremental fixed cost. Please, I want you all to pay attention to what is relevant and what is not relevant, so that we will not be going back and forth. And that is the reason why I sent the note earlier, that you go and check it, right? Now, Opportunity cost. Opportunity cost is the foregone alternative because of the project, and so should be considered as a relevant cost. Right? Opportunity cost. If I'm supposed to embark on a project, or if Rejoice supposed to give me 20 naira, and because I have to, because I have to embark on a project, and that project will cost me more. Either I accept what Rejoice want to pay me, or I go with the project. Opportunity cost is alternative foregone. What you forego for you to embark on that project, it is an opportunity cost. An opportunity cost is always relevant in decision making. An opportunity cost could be an inflow, a cash inflow, could be an outflow, could be a cost. Depends on the case scenario in the question. Financing cash flows, such as interest on loan, dividend, and preference dividend, are not relevant for investment analysis, as they have been considered in the determination of cost of capital used for discounting. Of course, the financing cash flows, the dividend, the loan are not relevant for decision because you would have used it to determine your cost of capital, the cost of borrowing for the discounting factor, right? So therefore, it is not a relevant cost. Then we have what we call working capital. And what is working capital? What you use to run a business, right? Your current assets minus your current liability will give you your what? Your working capital. Meaning that your working capital is as important as anything. It is as relevant as anything. Because when you don't have all these resources, you can't embark on these projects. When you don't have a supplier supplying raw materials, will you embark on a project? No. When you don't have a capital to start a business, will you embark on a project? No. Working capital are what you will use for a particular project. So therefore, working capital is a what? Is a relevant cost. Right? Now, material, where we will see a lot of, oh, it is not relevant. It is relevant. It is not relevant. Please, class, pay attention. When you have a material, when material needed for a project is available in the company and as alternative uses, what is the relevant cost? The relevant cost is the replacement cost, meaning that when you have a material for a project and it has alternative uses, probably you want to embark on 2 projects. You need 50 kg, you've used 30 kg, which means that 30 kg can also serve for the other material. We'll look at that as we move, right? Now, my point here is when a material, right, needed for a project is available, when the material needed for a project is available in the company and has alternative uses, meaning that you can use it for something else, right? You can use it. So the relevant cost is the what? Is the replacement cost, right? Is the what class? Is the replacement class. When material is available but has no alternative use, the first case scenario is when material is available and has alternative use. The relevant cost is the replacement cost. The second case scenario is when material is available but has no alternative use. You have the material in the store and it is just there. And the question now is, what will be the relevant cost? The relevant cost is the net realizable class. And what is the net realizable? If the material is 30 kg and Mr. Hay approach you that, okay, I will buy it 2 naira per kg, right? The cost you incurred before selling that material, right? Maybe the sales proceed, the realizable value from the material is 50 naira, and you have to incur cost, maybe transportation, right? In transporting the raw material. When you deduct the transportation, what we call incidental expenses, when you deduct it, you have what we call net realizable. Is that not so? So if the material is just there and it has no alternative use, what you need to do is to just do what? You sell it. The relevant cost is the what? Is the net realizable of the sellable what? Value. In the other case scenario, where material is not available at all, when material is not available, maybe you want to embark on this project and the material that you will use for the project is not available. The question is, what will be the relevant cost? The current purchase cost, the current amount you can get the material, that same material in the market, is what we call the current purchase cost. Where the material is not available, right? The relevant cost is the current purchase cost. You have to go to the market and buy the same material for that particular what? For that particular project. And the relevant cost is the current purchase cost. Now, in another case scenario where when materials can be used as a substitute for another material, meaning that you can use it as a substitute, right? It can serve several purposes, right? So the relevant cost will be the higher of the substitute costs of the material and the realizable value, meaning that if this material is a substitute, you have material A, material B. Material B is a substitute of material A. Is not so? So if it is a substitute, what will be the relevant cost? The relevant cost is the higher of the substitute cost, the cost of that substitute, of the cost of the material, and the realizable value. The higher of the two will be the relevant cost. In this particular material, we've looked at about 3 cases or 4 cases of material. Just prepare your mind. Let me just prepare your mind, right? You will see it, right, in the question where the examiner we want to test your knowledge on what? On relevant costs. Class, the first case scenario under the material is when the material is available and has alternative use, the relevant cost is the replacement cost. When material is available but has no alternative use, the relevant cost is the what? Is the net realizable value. In another case scenario, when material is not available at all, you have to go to the what? To the market to buy the same material, which is on what? On the current purchase cost. But in a situation whereby when material can be used as a substitute for another, you can substitute this for this, you can substitute A for B, you can substitute B for C, right? What will be the relevant cost? The relevant cost will be the higher of the substitute cost of the material and the what? And the realizable value. So we see about 4 case scenario under what? Under material. Please, you must know this 4 case scenario. Class 1, 2, 3, 4. Yes, 4 case scenario under what? Under material. Very, very what? Very, very important. Now, another thing is labor. When full-time workers do the job, class, the salary they paid is not a relevant cost. The salary is not a what? A relevant cost. Salary paid to them is not a relevant cost for decision making. But where casual workers, those people who are not duly employed, right? They will just come for it is for a particular project. Probably they want to construct a road and they just need to bring the casual workers. That they will just work for maybe 2 months, they will go, right? Where casual workers do the job, their wages is relevant. Of course, if it is a casual labor, right, the wages will be what? Will be relevant. Class. The full-time workers, right? The full-time workers, the relevant, what is it called? The salary paid to them is not a what? It's not a relevant cost. Why the casual labor, right? The wages being paid to them is a what? Is a relevant cost. Now, in another case scenario where we have an overtime, will only be relevant when it is paid on a specific project concern. Of course, if it is an overtime will only be paid when it is for a specific project. You want to embark on a project? Is it for that particular project? If it is not for that particular project, it is not a what? It is not a relevant cost. When labor is idle or have a spare capacity, that is another case scenario. When labor is idle or a spare capacity, they are idle. They don't have anything they are doing. They are just there. And excess capacity, that is spare capacity. And excess capacity, that is spare capacity. They have enough of energy. They have enough of time to do a lot of things. The cost of the labor is not relevant. Of course, we will all work in a private, in the public sector, whereby sometimes everybody will just sit down, doing nothing, right? And then at the end of the month, they'll pay them. Pay everybody's salary, the relevant cost, the cost of that idle of those labor, or when they have excess capacity or is spare capacity, right? The cost of the labor will not be relevant, class, since it is not incremental, but where labor is busy or has a scarce capacity. Class, please, you need to pay attention to this part as well. But where labor busy or has scarce capacity, the relevant cost will be the labor cost plus any contribution that will be lost for diverting busy laborers to the new project. Now, what this means is that when labor are currently busy, right, or there's a scarce capacity of labor, and you need these guys to work on this project, you need them. You have to move those guys, those workers, those who are full-time, those are laborers, you have to move them to the project, right? Now, if you move them from that project to another project, you know that the project you move them from, they will lose a contribution. Is that not so? They will lose a contribution because the labors they're supposed to use for them to use to produce that product, they may not be able to see such production because you've moved the labor, right? They're supposed to produce that unit to another project. So the other project, which is project A, will be losing a contribution. And what will be the relevant cost? The relevant cost will be the labor cost that you will pay them plus any contribution that will be lost. Now, if I'm busy working here now, right? I'm busy working here now, and someone call me that, oh, you need to come and do something for us. You need to come and take us physical class, right? Any contribution that next gen will lose here, all right? Any contribution that we lost here, right? We be what? That is the contribution. Contribution plus the amount at which those people will pay me will be the relevant cost, right? And you can also say is an opportunity cost, right? In labor, we have different case scenario. When it is full-time, it's not a relevant cost. But when it is casual labor, it's a relevant cost, right? Then over time, it can only be relevant if it is specifically for the project. And when a labor has excess capacity or idle, right, it's not a what is not a relevant cost, right? Because they are just there. They are not, it's not for a project, they are just there. They are just idle, right? This is not for a project. So the relevant is not what is not a relevant cost. Now, since it is not what increment, but we're in a situation whereby labor is busy. We are busy doing something, and you have to move me from this particular project to another project. Now, any contribution lost in that project you are moving, the first one you are moving, right, will be added to the costs of what they will pay me. So the total of this cost, what will be relevant for decision making. Next is what? The variable overhead. The variable overhead is always relevant unless stated otherwise in the what? In the question. Next is what? The fixed overhead. The fixed overhead is not irrelevant unless the examiner gives you the portion that is incremental attributable, right? Specific or relevant. An incremental overhead suggests that the figure for the first year will be constant all through the project. Now, class, unless if the examiner said it is what? Incremental. If it is incremental, you have to remove the portion of what? Incremental fixed cost. So with that, you can say, oh, this cost is actually relevant. Anything that has to do with absorbed, general apportionment, apportioned fixed overhead are not relevant for what? For decision making. And this is my explanation on what is relevant under the short-term decision. Don't forget that under the short-term decision, we have the make or buy decision, we have the accept or reject, discontinued operation, and as well as the relevant costing. Now, I've been able to explain the relevant costing that you may see, right, when you want to solve a question under what? Under relevant costing, under the short-term decision, most especially on labor, on material, and sometimes on opportunity what? On opportunity cost, right? So we are not on make or buy, we leave this. We are not on this, we leave this. We are not on this. Okay, the minimum price determination. We should not forget that most time the question will say, oh, determine the minimum price, right? Using the relevant costing. Determine the what? The minimum price. It is still relevant costing, right? Determine the minimum price using the what? Relevant costing. Now the question is, what is the minimum price? Is it simply the relevant cost without considering any profit or loss? In determining what? The minimum price. All relevant costs should be considered, ignoring any profit allowance given. Class, anything that has to do with relevant costs, anything that has to do with profit, remove it. It is not, that is not what they say we should look for. They say minimum price, cost. We want to know the minimum price that I can bid for this particular what is it called, project, right? Anything that has to do with the profit or loss, you have to ignore all those. What we need is just the what? The cost, right? Then we have illustrations on decision making. So before we look at an illustration on decision making, please, if you have question, can mute your mic and ask a question before we look at this illustration one. Quickly, if you have question, you can quickly unmute your mic and ask a question. Class, are we good?
Yes, sir.
Okay, that's fine.
Yes, we are good, sir.
Right. Michael.
Good evening, sir.
Good evening, Michael. I hardly hear you. I don't know if you are using AirPod or earpiece.
I'm looking here for America, sir. I want to ask you, can you further explain that material? I'm not getting the material.
I've explained to which part of the material you don't understand. When we solve question, you will even understand it. But which part of the material you don't understand? You have to understand that material.
That can make up for that part when you see that people about the working, how working, how continuous,
I
that continuous,
hardly, honestly, I can't hear you.
how continuous that to
Oh, same thing. I can't hear you, honestly.
He said he doesn't understand the material part.
Which part of the material now? Which part of the material? Where is you did not
I
understand the
think
part
he
of the
should
material?
remove the AirPods. He should disconnect the AirPods and use his phone directly.
Okay, I think that would be better. Then let me increase the volume. Okay. So that other part, right? Anytime we want to solve question on relevant costing, I think we have about make or buy decision, make or buy. Yes, we still do relevant costing. By the time we solve like 2 to 3 questions, all those places you say you don't understand, you just have to read and understand it, because it's that one. It's even knowing the principle self is one part. The how to even apply it in the question is another. But that principle, you must understand it, that this is how it works. If material class, if material, and every one of you, in as much from now, our decision making will be like, I think, 3 to 4 classes for decision making. In as much, if we enter the class, the first thing is that Bashirat explain material, Abidemi explain labor, Abigail explain fixed overhead, Michael explain depreciation, who again? Rejoice. We'll pick like that, right? That is how to learn, and that is how to understand relevant costing. And one thing about relevant costing, you don't solve one question and tell yourself that you understand relevant costing. No, you keep solving questions. You keep solving questions, because the more you solve, the more you see different case scenario, right? Now, we have this question here, question 1. If you have your material, illustration 1, you can check illustration 1 if you have your material. Please, who will read the required? Who will read for us, please?
Or read.
Okay.
Good evening, sir.
Good evening.
Required. Using relevant costs, calculate the lowest price John should quote for the building, for the building job. Explain your treatment of each item in accountant's estimate.
Thank you. Class, you see, one thing about relevant costing is that the notes are very important. And that is the reason why this question says, explain your treatment. So when you say this is not relevant, you have to state it in the notes. You have to say note 1. Oh, this is not relevant. Fixed overhead is a fixed cost, therefore it is not relevant. You have to be stating it, because all those things form part of the we form part of your what is it called, your mark, right? If the this thing is 15 marks or 20, let's say it is 20 marks, right? So those notes can form like 5 marks. All those ones can form like 15 marks from it. You can see how important. So you cannot just write, oh, determination of minimum price. Bam. Oh, this is not relevant. You just put the 0. Oh, this is relevant. 25. No, this is not. It's not like that. You have to show. You have to show workings. You have to show it. Please. Now, if we have this, the lowest price John should quote for the building job. Of course, an accountant will just estimate all the cost, whether it is relevant or is not relevant. It's the cost accountancy we now look at it that
Don't do my big part about my gym.
it's the cost accountants that we look at it that, oh, this is not relevant, or the management accountants, right? So Let's check this out. Okay. Okay, Anna.
Yes, sir. Okay. John is a self-employed builder. Has been asked to provide a fixed price quotation for some building work required by a customer. John's accountant has complied the following figures together with some notes as a
Okay.
basis for the quotation.
Now, thank you. Now, John is a builder. Is a self-employed builder, and has been asked to provide a fixed price quotation for some building work required by a customer. Give us a quotation. Then, as an accountant, just accountant says, okay, I just compile everything: direct labor, other material, this scaffolding, depreciation, the total. As an accountant, and it gives the following basis for the what? For the quotation class. We have here the breaks, we have the amount. You can see that they attach notes to it. Is that not so? They say this is, if you check note 1, you will see information about these two. About these two. Which is this. If you check note 2, who is that now? The person should mute his or mic, or I will remove the person from this. Please. Yusuf, can you mute your mic? So we have other materials. If you check the notes, you will see note 2 that talks about other material. We have the skills. So if you check the notes of all these figures quoted, right, they would have stated something in the note. So we have to quote the lowest price. This is the suggested price by John's accountant. Remember, they need to present this to as requested by what? By a customer. And the question says the lowest price John should quote. Right? So I can come here and say suggested solution. Suggested solution. John is a self-builder. Okay. No name. Okay, that's fine. Suggested solution, determination of lowest price. Determination of lowest price. So can have your Naira sign. If it is in 1,000, okay. Your Naira sign. So notes. Okay. So we need to pick it one after the other, right? Based on the information provided. Or we use just one. Okay, let's just use one. Just use one. Okay, we start with note 1. We start with note 1, direct material, bricks. Okay, please if you are chatting with your boyfriend, Abi, your fiancé, your everything, Abi, please, can you just stop that chat? Just pause it, like maybe just give us like 30 minutes. Then after that, you can now continue your, you didn't call me since morning. I called you, you didn't pick. Okay. So please, so let's focus. Eh, go best. Continue. So, Debbie, so the first notes, the contract requires the contract requires 400 bricks. 200 are already in stock. Class, for them to execute this order, this project, they need 400 bricks. Then 200 are already in stock. They have 200 inwards in stock. They are left with what? 200. And 200 will have to be bought in. And 200 will have to be bought in. Now, this is a standard type of brick, regularly what? Used. These bricks, this brick, they are regularly used. Class, we should not forget that under the material, if material has if material has alternative use, what would be the relevant costs? The relevant costs will be replacement costs, right? But where material is not available, the relevant cost is the current purchased cost. Now, class, the material is regularly what? Used. Means that the material, the brick is important. The 200 in stock were purchased earlier in the year at 100 naira per 1,000. Class, what is this cost? This 100 naira per 1,000 is which cost? Which cost can we call it?
Sunk cost.
Is a sunk cost.
Sunk cost.
Is a sunk cost. We need to quote
cost.
We need to quote
cost.
We need to quote for the bricks of 400. You already have 200. And 200 will have to bought in. You purchase the 200. Is that now? You purchased the 200 earlier at 100 naira per 1,000. Right? This will be a sunk cost. This cost will be a sunk cost. The current replacement cost of this type of brick is 1,000, meaning that if you want to get these bricks now, the current purchase price now is 120 per 1,000, and they need 400 bricks. Now, how much will you now quote the 200? Although we already know that we will buy 200 at the current replacement cost, right? The 200 are already in the stock. We cannot quote it at this price because this price is a sunk cost. So this will be quoted on the current replacement cost because it has alternative use. So therefore, if the bricks in stock are not used on this job, John is confident that he will be able to use them later in the year. They have alternative use. If you're not using it for this job, you can use it else. Plus, this costs is not a relevant cost. This purchase price, what is relevant to us is the replacement cost of the 400 bricks needed. 200 already in the stock. We have to quote it at the current replacement cost. What you want to buy, you have to go to the market and buy the material of 200. But the current at the current replacement costs of that of the bricks. So therefore, material, direct material, okay. Direct material. We have bricks, the 200 bricks, right, times what is the current replacement cost? Class, what is the current? 120 naira per 1,000. Meaning that this will give you 200 bricks, right? Just like the way under your cost of capital, right? When you have 200 times the 120 divided by 1,000. What is 1,000? 1,000 means that for every 200 bricks, we have to have 1,000. How many 1,000 can you see in 200 bricks?
200.
How many 1,000? So we can say 1,000 times the 120. 120. What do we have?
240,000.
2 what?
240,000.
240.
24,000.
24,000 naira.
24,000 naira. The second
Yes,
brick.
24,000 naira.
The second bricks. of 1,000 times the replacement cost what do we have?
24,000 naira.
That is 24,000, right?
Yes, sir.
Yes, sir.
Yes, sir.
Thank you. So you can come here and say note 1. The question says, explain your treatment of each item in the accountant's what? Estimate. Notes. Note 1. The relevant costs. The relevant costs of 400 bricks is the relevant cost of 400 bricks is 48,000. That is is 48,000. That is 200 200,000 divided by 1,000 times 120 plus 200,000 divided by 1,000 times 120. The purchase price. What is the earlier purchase price? The purchase price. What is the earlier purchase price?
100 naira.
100 naira.
100 naira.
100 naira
By
for 1,000.
1,000. By 1,000.
So why did we use 120 for the 2?
Why what? The purchase price. The purchase price. The purchase price of the bricks, or the earlier purchase price of the 200 bricks in stock. Is it in stock?
Yes, sir.
Purchase price of 110, right? Is it 110?
100.
100 naira.
1,000.
Okay. Of okay. 1,000 brick in the stock is not
The relevant cost.
right, is not relevant. So sunk costs. So this is it. That we have the 400 bricks, right? 200 already in stock. You have to determine the costs of the 200. The 100 naira per 1,000 is not relevant. And the material on the bricks is regularly used. First, they have to get this outside as the current price. This, what will be the cost of this? You can use this because this is a sunk cost. So the current replacement cost of this will be what? Will be 120 per 1,000. Because if John did not use these 200 bricks, they're already in stock. John can decide to use it for another what? Another project. In another analysis, you could say that the first 200 already in the stock can serve as opportunity costs. Because if the bricks in stock are not used on this job, John can decide to use it for another project. You can equally state that, oh, if that will be the case, so definitely if they don't want to use this 200, they can use it for another what? For another project, right? And it is a cost because 400 bricks needed. They need to purchase, they need to get the 400 bricks. And also they need to get the quotation for the what? For the 400 what? Bricks. Now, the second one is on other material, right? The second one is on what? Other materials. Sonia.
Okay, sir, I have a question. This solution, is this is it standard? Like, is there it must always appear? Because I was thinking, since the material, both of them are in the same price because the other material was irrelevant. It was an irrelevant cost. So what if someone now says the total number of what's it called needed, the total number of material needed times 120, then you get 48,000. Then add your notes to the account. You say the reason why you are using 48,000 was because the other cost was irrelevant. So I was thinking,
You can use what works for you.
okay, thank you, sir.
You can use what works for you. Thank you. So the next one, what we have here is other materials. Other materials will be bought in as required. This figure represents the purchase price. So we quickly go and check our other material. What is our other material? 5,000. And it was stated in the notes that other material will be bought in as required, as stated, as required. This figure represents the purchase, meaning that what you have there is the purchase price of the material needed, right? Needed. So, other material, note 2, 5,000 naira, right? So you can come here. Other material is a relevant cost. Other material of 5,000 naira is a relevant what? Is a relevant cost. So we move. Next. John will need to be on site. John will need to be on site. While the building work is being done. He therefore needs to do 800 hours of the skilled work himself. Let's check the note 3 from the information given to us. Okay, we have skilled and unskilled labor. Okay, we have skilled, okay, and unskilled labor. Okay, John will need to be on site while the building work is being done. He therefore intends to do 800 hours of the skilled work himself. Plus, John will need to be on site while the building is being done. And when he's on site, under the skilled labor, he has to use 800 hours. Class, how many hours for the skilled labor? 3,200 hours. Now let's do the analysis here. Total labor hours. 3,200 hours. Then John will use, he therefore intend to do 800 hours of the skilled work himself. Total labor hours for skilled, total skilled or total labor hours for skilled right? Then John will use 800 hours of the skilled work himself. John hours is 800 hours. So what do we have? What do we have here?
2,400 hours.
2,400 hours. Good. The remainder will be hired on hourly basis. This remainder, okay, remainder. On hourly basis, the current cost of skilled labor is 12 naira per hour. So we pay this, the labor, 12. Let's say the costs is 2,000. Let me multiply it. All right. 12 naira per hour. What do we have? If you multiply it, what do we have?
28,800.
$8,800.
No. naira now.
Yeah, naira, naira. Sorry.
It's
Our cancel out.
8,800.
28,800 naira, right?
Yes.
Yes, sir.
Thank you. Thank you. So, if John does not undertake the building work, if he can either work as a skilled worker for other builder at a rate of 12 naira per hour. Class, John works with other builder. Class, if John does not undertake the building work, he can either work as a skilled worker for other builder at a rate of 12 naira per hour, meaning that if John have to be on site, he needs to use 800 hours of the skilled labor hours. But if John does not want to undertake this, he can go and meet his other builder instead of John to be on site. That 800 hours, John can go and meet other builder and work for them as a builder, right? And they will pay John 12 naira per hour. So 800 times 12 naira per hour. How much do we have here?
19,600.
9,600.
9,600 naira. Meaning that if John is not on site, John can decide to use that 800 hours of the skilled worker labor for like he can meet other labor for Gombody like that. Is that not so? So he can go and meet them for those sharp work now, and why the work is still going on the site, he can use that 800 hours or spend the 800 hours completing urgently needed repairs to his own house. And John can decide that instead of me using this 800 here, right, I can decide that I want to use it to complete my house. And in completing John's house, he has recently had a quotation of 12 naira for labor to repair his home. Class, meaning that 800 hours, if he is not in his home, if he is not in his house, he will incur 12,000 naira for repair. John's house quotation for labor ₦12,000. Class, we should not forget that the remainder of this, right, is a relevant cost because they have to pay the casual labor who will come and, after you've removed the 800. Now, the 800 hours is now where we are now saying, how do we treat it? Then we establish the first case scenario. And this is the second case scenario. Right? Or spend the 800 completely. So if John decides to join other builders, right? Join other builders, it will cost John 12,000 naira because they have to repair his own house. Class, they have to do what? Repair his what? His own house. Now, the question is, what will now be the relevant cost? Now, it will be an opportunity cost here because of that 800 hours for John is as important as anything. Because if John decided that I want to be on site, he will lose these two. One, he has to pay for labor or for builder. Now, what would be the opportunity cost? Is the higher of the two, because I will not want to pick the lowest. Is the higher of the two will be the opportunity cost. So therefore, if I have to be on site, because obviously they want to execute the project, that is why they say you should do a lowest price. So if John have to be on that site, so this 12,000 naira that he will spend on his own house, if he's there, he will not spend that 12,000 naira. Right? He will not spend that 12,000 naira. But because there is a project, he need to be on ground. Class. So this 12,000 naira will be added to the cost because John will need to be on site. That 800 hours is supposed to be, he's supposed to use it for his own house, but he's on site. So the relevant cost is the higher of these two. So therefore, what is the total relevant cost? Total
40,000.
800 naira.
16,008.
15K.
40,800 naira.
Total relevant costs. What do we have? How much?
40,800 naira.
40,800.
40,000.
They are solving under the question.
Yes, I know. I purposely do it like this so that you understand. Yeah, I will just copy it. Don't worry. I'll copy it to the workings. Thank you. Right. So 40,000 what? 800. Right? You can see the way I analyze this question. So you will see more of this kind of question as we move. Like you will see a similar question like this. But your ability to pick them out after the other, like you have to just calm down. Anything that has to do with relevant cost, you can't do relevant costing question. You just want to do it like it is not a limiting factor now.
Under
It is
3 hours,
reasoning.
calm down, okay.
It is what? Reasoning. You have to settle down first and ask yourself, okay, what are the relevant costs? Pick it out. Class, are we good?
Yes,
Are we
sir.
good? Okay.
Yes, sir.
Thank you. So I can copy this now. Okay. So note 3 away. Okay. Note 3, the higher the higher of the two, right? Okay, let me bring this down. So you have to state it like this, right? Okay. So we can move, right? This will be 3. Okay. Skilled labor, 40,800. Skilled, let me check what they did there. They observe. Okay, direct labor. Skilled, no 3, 40,800. Next, what do we have? Next,
There's unskilled labor.
okay. Notes 4. Note 4. John employs 4 unskilled workers on contracts, guaranteed them a 40-hour work at 6 naira per hour. These unskilled laborers are currently idle and have sufficient spare time to complete the proposal under consideration. Is this a relevant cost? Class.
No.
No.
Why?
No,
Why is
sir.
it not a relevant cost? Why?
Because the
They-
laborers, they are
Idle.
idle at the moment, so they are not doing anything.
And
They
they
have
have
time to complete the work.
Spare time to
Thank
work.
you. Thank you. Thank you. It's as simple as that. Because you have guaranteed them that you will pay them this amount, and they are currently what I do. Right? So note 4, unskilled labor. Unskilled labor. Okay, note 4. The unskilled labor are not relevant since they have spare capacity and they are currently idle. The unskilled labor costs. The unskilled labor cost. What is the costs of the unskilled? 400 hours per week. 400 hours per week times 6. What do we have? 400 times 6.
40 hours.
It's 40 hours.
Okay, 40 hours. Okay, 40 hours. Okay, sorry. Okay, 40 hours. Okay, 40 times 6. What do you have?
$240.
We have
240.
240. We have 240, right? Okay. We have 240. Okay. 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 So are we good? Class, are we good? Can we move?
Yes, sir.
Yes, sir.
Okay. Next. This is the estimated costs of hiring scaffolder. You know, scaffolder, it is what they will use for the building. Let's check. Note what? Note 5. Scaffolding hiring. They need it for the building, right? It is a relevant cost. Scaffolding. Scaffolding. What do I have? 5. What is the scaffolding? What is the amount? You have the question with you. What is the amount?
35.
35.
Okay, 35.
35.
3,500. Note 5. Note 5. Of 3,500 is a relevant cost. Now, let's quickly go back to these 4 because something just hit to my mind now, right? But let me quickly share. Sometimes relevant costing is not difficult, so it's not. You see, your ability to understand the principle, you can interpret the question. Now, they said 40-hour work, 40-hour week. How many weeks did they even work for this? Did they want to work for this particular project? It wasn't stated. In some question, you'll be given the numbers of weeks they need to execute the project. Right.
Please,
They
where
need
was
to
the 35 gotten?
they need to execute the project. Note 5. What is on note 5? This is your note 5, right? Can you see it?
Okay, thank you, sir.
So depreciation, note 6. There's nothing they want to tell me here. If they like, they should say they have this, they have that. Anything that has to do with depreciation. Depreciation is not a relevant cost. So, but let's just read it for reading's sake, right? John estimates that the project will take 20 weeks to complete. Oh, 20 weeks. Okay. This represents 20 week straight line. Straight line. Straight line depreciation on equipment used. If the equipment is not used on this job, it will be stand idle for the 20-week period, blah, blah, blah. In either case, it is valued at the end of 20-week period will be identical. anything. All these things is just story. Depreciation is not a relevant cost. Right? Depreciation. Cease 0. Depreciation is not a relevant cost. Next. Next note. This represents the rental cost. Oh, we need to stop here. Oh, okay. This represents the rental cost of John's storage yard. If he does not undertake the above job, he can rent his yard out to a competitor who will pay him rent of 500 naira per week for the 20-week period. Class, if John decide that he does not want to execute this project, he can be receiving 500 naira per week, but they want to undertake this project because it is for a customer. So meaning that they have to forgo this 500 naira per week that they will receive from their competitor. And this 500 naira per week that they will forgo, they have to add it to the costs because they have to forgo the 500 naira per week for the what? For the project. So 500 the rental costs or the rental payments of 500 naira per week times 20 week, right? So what do we have?
10,000
naira.
That give us 10,000 naira.
10,000.
It's a relevant cost. Other, you can also call it an opportunity cost because you've forgone the rental income for the project. You have to add it to the cost of the project. 10,000 opportunity costs. Right. Talk about note 8, note 7. Okay, is the note 7 we just finished, right? Note 7. Okay. So right. So you can call this opportunity costs or a rental costs. Note 7, 10,000 naira. What do we have again? Note 8. This is the cost of the plan that John has already drawn for the project. Is it a relevant cost? Note 8. Is it a relevant cost? Class. This is the cost of the plant.
No.
No.
sir.
Is a what? Which type of cost is this?
Sunk or historical.
It is a sunk cost
Sunk cost.
because this is the cost of the plants that John has already done even before the project, meaning that whether they execute the project or not, they will incur these costs.
It is relevant.
So it is not what? It is not relevant. Class. Right? So plants. Quickly before we go. We have to go now. Okay.
So there no amount was attached to it, or is there amount in the question?
There is.
Okay.
There is in the
We are
other.
referring to the note 8. 2,000 naira. Can you see it?
Yes.
We are referring to the notes, please. Plan.
Note 8 though. So I put 9.
Okay. What is the plan costs of 2,000 naira? Is not a relevant cost. Okay. So thank you so much, everyone. I think you can complete this, right? So the last one, anything that has to do with profits, remember, is not relevant here. We don't need all this markup or margin. What we need, what the question says we should calculate is the lowest price that John will quote, not profits. Class, not profits.
Yes, sir.
Right? So we don't need the markup. So what will be the lowest price? When you add everything together, what will be the lowest price?
Sir, please change the note 9 to 8.
What will be the lowest cost? What will be the lowest cost? Lowest price that John Wick quotes. What do we have?
107,000.
107,300.
107,300.
300 naira. Can you see?
Yes, sir.
From 130 something thousand that was quoted by the accountant, 134 according to the accountant. So we now have 107,300. That will be the lowest price. Distinguished professional colleagues, I think I've been able to do justice to this question. In our next class, we'll solve more questions under relevant costing. It's very simple. Right, relevant costing question is very, very simple. You just need to
You mentioned that you solve last diet's question.
No, you'll be the one to solve it. Or you'll be the one to solve it. You can solve it. You can solve it now. Just go and try it. Okay? Go and try it. So thank you so much, everyone, for joining. And enjoy the rest of your evening. Since there's no question, I need to go. Right. I need to go.
You,
thank you so much. Thank you.